So, when you think of Dubai, what's the first thing that pops into your head? Probably those crazy futuristic skylines, right? Unbelievable luxury. I mean, it's the kind of place where celebrities like Shah Rukh Khan and billionaires like Mukesh Ambani are buying up properties for hundreds of millions of dollars. The real estate market there isn't just hot, it is absolutely on fire. But that makes you wonder, doesn't it? Is this whole thing just a beautiful mirage shimmering in the desert? You see all these splashy headlines about record-breaking sales. But is Dubai's real estate market a real deal gold mine? Or is it a ticking time bomb just waiting to go off? Let's dig in and figure it out. Okay, so what is fueling this complete frenzy? Well, you got to look at the pure numbers to get it. An investment of, say, 1 crore rupees in Dubai could explode to 2.5 crores. That kind of growth it absolutely dwarfs what you could ever expect in a city like Mumbai or Delhi. It's not even in the same league. And the returns, they don't stop there. When we start talking about passive income, the money you make from rent, the numbers get even crazier. For a pretty similar property, the rent you could pull in from Dubai can be more than double what you'd get in Mumbai. We're talking about a serious cash flow machine. But honestly, here's the real kicker. This is the one benefit everybody talks about. Zero. A big, fat zero. That's the local tax you pay on your rental income, on your capital gains, on the property itself. It is a jaw-dropping, unbelievable incentive for investors all over the globe. So those numbers sound incredible, right? But what's the secret sauce behind them? To really get it, we need to decode the two fundamental things that make any real estate market boom. First, capital appreciation, which is just how much your property's value goes up. And second, rental yield, the actual income it puts in your pocket. Now, check this out. This is where it gets really, really interesting. A property in Dubai is appreciating at a staggering 5 to 8% a year. That actually outpaces major global hubs like New York and London. In plain English, your asset is just growing faster here, period. But look, a growing asset is only half the picture. The real game changer here is the potential for passive income. $1 million property in Dubai can rake it up to $85,000 a year in rent. That is a massive leap from what you'd ever get in New York, London, or Mumbai. And this slide right here, this is the knockout blow. In other cities, a huge chunk of your profits, we're talking up to 45%, just gets eaten up by taxes. But in Dubai, because of that zero local tax policy, you keep every single dollar you earn. So the point isn't just about what you make, it's about what you actually get to keep. Okay, so far, this all sounds like an absolute dream. But that brings us to the giant elephant in the room, the single biggest risk in any property boom. We have to ask the scary question. Is this explosive growth actually sustainable, or is the supply of new properties about to totally overwhelm the demand? And this is the classic trap. It has brought down so many markets before. I mean, history is just littered with examples, right? From China's ghost cities to the US housing crash back in 2008, the story is always the same. Developers get greedy, they overbuild, supply floods the market, and then prices just come crashing down. So, is Dubai heading for that same fate? Let's just look at the data. The residents per unit ratio. Think of it like a market's vital sign. A number over 2 is healthy, and Dubai is sitting at a really strong 2.72. That tells us that population growth is still outpacing new housing. And look at the absorption rate. 89% of new units are being snatched up, with luxury properties hitting an incredible 95%. Homes are literally flying off the shelves. So what about affordability? Well, this price-to-income ratio is a simple way of measuring how expensive homes are compared to what people actually earn. Now, Dubai is definitely not cheap, sitting at 6.7. But just look at Mumbai, London, or New York. They're in a completely different universe of being overvalued. This suggests that Dubai's market, while, yeah, it's expensive, is still way more grounded in reality than some of its peers. But here it is. This is the single most mind-blowing factor of all. In most cities, the rent you collect won't even cover your monthly mortgage payment. But in Dubai, because those rental yields are so incredibly high, the rent can actually be more than your mortgage payment. That means after your down payment, the property could literally pay for itself. It's a financial equation that's almost too good to be true. So all this data paints a pretty compelling picture, right? But it also feeds into this huge myth that you have to be a billionaire to get a piece of the action. Well, that's just not true. There's an insider's playbook that reveals a completely different story.
And you know what? Here is the most surprising part of that playbook. In Dubai, the highest rental yields, the absolute best return on your investment if you're just looking for cash flow, they aren't found in the glitzy multi-million-dollar villas. Nope. In fact, it's pretty much the exact opposite.
To really get this, you have to stop thinking of the market as just one big thing. Instead, think of it as 5 completely different tiers. You've got everything from the ultra-luxury playgrounds for billionaires all the way down to the essential housing for the city's massive workforce. And for an investor, each of these tiers serves a totally different purpose.
And this table right here, it lays out the whole strategy perfectly. If your goal is just status or big capital gains, you play in the ultra luxury tier. But guess what? Your rental yield is going to be the lowest. If you want a balance of growth and cash flow, the mid-range tier is your sweet spot. But if your only goal is to maximize that rental income, you go for the worker housing tier. The yields there are over 10%, the highest in the entire city.
So now you have the numbers, you have the playbook. Seems like a foolproof plan, doesn't it? Well, that's exactly what the real estate agents want you to think. But there are some pretty serious landmines lurking just beneath the surface that they might not be too excited to talk about.
Okay, landmine number one is financing. For a lot of foreign investors, say from India, regulations like the Foreign Exchange Management Act, or FEMA, can make it straight up impossible to get a home loan for a property in Dubai. That means you either have to pay the whole thing in cash or get a local UAE loan, both of which can tie up a massive amount of your capital. The second, and maybe the biggest, danger is the market's deep, deep connection to the US economy. Because the local currency is literally pegged to the US dollar, whatever happens in America has a direct and immediate impact on Dubai. When the US housing market totally collapsed in 2008, Dubai's market crashed by 50% just 1 year later. History has shown us when the US sneezes, Dubai catches a very, very serious cold. And then we've got the tax trap. Yes, it's absolutely true that Dubai itself will not tax you. But here's the catch. Your home country almost certainly will. Any rent you earn, any profit you make from selling that property in Dubai has to be declared back home, where it will get taxed based on your local laws. So that zero tax stream, it's not quite as simple as it sounds. So the big question is Dubai crash-proof this time around? Well, on one side of the scale, you have really strong demand and new government rules designed to stop overbuilding, which makes the market look a lot more stable. But on the other side, that looming risk of a US recession and the market's heavy reliance on foreign money, those are still some very real red flags. So what's the verdict? A gold mine? For sure. It can be an investment with incredible returns, but only if you really understand the risks, you pick the right property tier for your goals, and you have the capital. But it can just as easily be a trap, a financial nightmare waiting to happen if you ignore all those hidden landmines we just talked about. And that brings us to our final question. After seeing the incredible potential side by side with the very serious risks, where do you stand? Is investing in Dubai a smart, calculated risk, or is it just a high-stakes gamble out there in the desert? Well, that answer, as always, is in your hands.